the tariff tantrums, the focus now shifts to the central bank's next move, and respondents to our CNBC-TV18 poll of top bankers, economists and bond dealers expect the RBI's Monetary Policy Committee to acknowledge these global risks but remain firmly focused on domestic dynamics. Now, most expect RBI to front-load its rate cuts in April and June as tariffs threaten to hurt economies globally. Now, all of the respondents to the CNBC-TV18 poll expect the MPC to deliver a 25 basis point rate cut in this policy, with inflation cooling, growth slowing, the dollar weakening, US yields dipping and crude prices falling. The RBI does have room to act, so the call on the rate cut is unanimous, but the question is, what else? Now, here's where opinions start to differ. Half the respondents expect a shift to an accommodative stance, signaling a more dovish RBI, but 40% think the MPC will stick with a neutral stance, keeping options open amid what is a very uncertain environment. The terminal repo rate is seen at 5.5% by the majority, and that implies a total rate cut of 75 basis points in this cycle. No major liquidity surprises are expected. Now, RBI has already been addressing tight liquidity through OMO purchases, currency swaps, higher tenor VRR auctions, and it is likely to continue doing so. Any more here is going to be seen as a positive. Now, economists expect anywhere between 30 to 60 basis point hit to our GDP because of higher tariffs, but for now, the majority expects RBI to leave the growth forecast for this fiscal unchanged, while a small section does expect a little bit of a downgrade. On inflation, which is tracking below RBI's estimates, 60% believe it is going to be left unchanged, while 40% see it being revised lower to a 4 to 4.1%. Now, the tone of the policy expectedly will be dovish in the face of emerging external risks. With inflation under control and growth headwinds building up, the RBI may just choose to lay the groundwork for further easing in the months ahead.